What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is November 18th, 2020. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action in the indices, including that incredible reversal that we experienced. We're going to talk about the volatility. We're going to go under the hood and check out the sectors and style factors, look at some trades that I took, and then we'll wrap up some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. I am wrong 100% of the time, so you should always follow your own trading plan. And last but not least, do not YOLO your entire account into any one of my trades. So with that being said, let's jump right into it. Let's start off with the ES and let's take a look at what we got today. So sure enough, let's just recap what we've been talking about, for the last 2 weeks or so. We had, a really nice bull run heading into October. Then we had, like a big decline going into the election. Everyone got super, super bearish right before the election because they all thought the world was going to end. And sure enough, when it did not, we had a massive run up. We tagged the R1 pivot at 3,640 on the ES. Really, we've just been consolidating for the last week or so. And, we've been going through OPEX, which has been some very choppy action. And again, just to set the stage, I have been talking in these videos about how sentiment had gotten really hot and how I was looking to use this options expiration week as an opportunity to really close down a lot of positions and not really load up on a bunch of new ones. So if we take a look at today's candle, we were looking pretty okay for most of the day. Let's take a look at the 1 hour chart and let's just break this down. So today we came in, expectations were, probably some chop. But if you take a look at what happened, yeah, it looks like we were doing okay. We had, 9 o'clock really just chopping around. And then we ended up getting around noon the announcement that New York City or New York as a whole was going to be closing down their schools for the year. So you can see we just started diving after that announcement, and we ended up breaking into the weekly value area. So if we zoom out, let's see what, if any, technical damage has been done. So you can see we're still in a very bullish trend, but one thing to note is that we did break that 5-day exponential moving average, which is pretty significant. So, overall, this chart still looks pretty bullish. But really the next target we would claim on the downside is the value area high at 3,490 on the S&P 500. So we'll have to see. We'll have to take it day by day. But again, everybody was getting super giddy about this market. Again, we tagged that R1 pivot. And for that reason, I started just dumping a lot of positions. And you can even see that, on my Twitter feed. You can see all the closing trades that I was doing. Because looking at all these different indicators, in terms of like fund manager positioning, all these fund managers had drawn down on their cash balances. There's very low short interest. And really you just have everyone expecting a rally. Twitter sentiment, at the highs, really all things we've been talking about. But let's take a look at the Qs. Yeah, very similar. The Qs, again, they have not been making higher highs. They've really been consolidating. And they also lost as well. If we just go down the board, we had S&P 500 down 1.2%. We had the Qs down 0.74%. And we had the IWM Russell down 1.4%, our big loser for the day. And we had the Dow Jones down 1.19%. So it's kind of funny. One thing to note is, we've been in this value rotation where people have been, dumping their COVID winners, adding to cyclicals. And with this news of New York shutting down their schools and really just all this news about COVID getting out of control again, Sure enough, today we did see that tech was the best performer. So we'll have to see if that turns into a trend or if this is really just a counter trend move. So let's see, we have IWM. This one had gotten very extended and short this one. We can get into that, in a couple of minutes. Yeah, IWM, it's still holding even the 5-day EMA. So this one definitely looks, we're still in a bullish trend. We'll have to see what the river brings for the technical damage yet. Now let's take a look at the Dow. Probably going to look very similar. Okay, yeah, Dow Jones, we did break the 5-day EMA. So IWM is really the only index that's still holding that 5-day EMA, but we will have to see, what comes in the following days. Like I just had this feeling, like I've been describing with these indices, even though they're all pretty much, at all-time highs, the Russell really, in my opinion, is the most bubblicious, overvalued one. And while it hasn't had a prolific run this year, it's just the fundamentals in the small cap index are just so bad. Like a lot of these companies, the smaller companies were really the ones that were hurt the worst by COVID. So it definitely makes sense if we, have some sort of new shutdowns, if fiscal stimulus gets pushed out or doesn't go through, the IWM has run very far, and that's why there's, potentially a lot of downside, and that's why for my hedges I chose to use IWM. So let's take a look under the hood, and we will check out these sectors and style factors. So let's see what we got here. Okay, for sectors, these are again ranked in terms of momentum. You can see XLE Energy down to 2.91%. We had the cannabis stocks moving into our number 2 spot, down 0.97%. European financials still managed to have a gain of 0.12%. But even you can see the regional banks, which have been leading, did take a step back. Now let's take a look at our laggards. Gold miners cannot catch a break, down another 3.03% today. We had utilities down, and we had the medical devices down. And really the only standouts in terms of positive performance were retail, up slightly. We had this autonomous tech and robotics ETF up 1%. And we had, it looks like global autos were up as well. So there were a couple of hiding spots, a couple of bright spots. But for the most part, we did have a red reversal day. In terms of these style factors, the best performer, let's take a look. Okay, international value down only 0.73%. Okay, yeah, and momentum and international momentum were barely down. So you can see, we've had this move where value stocks have been outperforming. Growth is taking, sort of like consolidating, not really going anywhere. And now given these COVID reinfections, we'll have to see if this has any legs. But stocks like, Zoom had a pretty good day, Nautilus, Peloton, all those stay-at-home COVID winners, had little counter trend bounces. So we'll have to see if those are just little temporary bounces or, something more. Oh, this was funny. This was my tweet from earlier in the day. Earlier in the day, everyone was going crazy on Twitter. People were, jumping into calls, jumping into positions. People were celebrating how well they've done. And so I posted this at 11:22. The bears are completely extinct. I had a few holdouts that maintained a bearish bias since before the election flipped bullish in the past few days. And there were a couple of standouts, like I said, people that are really, I don't want to say perma bears, but tend to lean towards the bearish side that ended up capitulating within the past couple days. So that to me, when I see all these sentiment indicators are lining up, everyone is in the market, everyone's in the pool at this point. Then you see well-known perma bears that are flipping bullish. And then you just look at your portfolio. So like me, I started dumping positions yesterday and today. Really this whole week I've been cleaning out my portfolio. And the reason why, this is just me personally. My P&L got to a point where, it was just looking very good for the year. And I got to a point where I was like, You know what? I would not mind leaving off at this spot at all. Every time we've gotten to around this 3,600 level in the markets, it's led to a correction. So I just figured, why not just be a little bit more conservative into year end? I'm going to start taking some positions off, especially when I have the cover of, all these people that are super bullish and a nice green tape. So for some of the trades that I did today, again, just closing out a bunch of positions. Apps closed this one out for a small gain. These were December 18th calls that I picked up for $4.15. For these, whenever I'm trading a swing position, I typically like to have, like a good 2 months on the options, sometimes even more than that. So I figured, these are expiring in December. Let me just take the quick scalp. Roku as well. This is a trade that I tried to put on yesterday, and we really just didn't get the move that I was looking for. These were November 27th, 242.5 strike calls. Ended up taking these off for about a 45% loss. But I just figured, let me cut this one while I can. My outlook moving forward isn't super bullish given that everybody is in the pool. So let me just take that one off. Nanox as well. Ended up closing this one up for about 33%. This was a breaking news trade that I put on in the beginning of October. Nanox has had a pretty nice move. And again, this is a very speculative position. It has a pretty low float. And so I figured, if there is some turbulence, this one I'm sure there's going to be volatility and I can probably buy it back at some point. So I figured, let me take that one off as well. Trades that I entered. So originally my thought process was, the trend is still up. So I'm just going to lighten up on a lot of longs. Take this opportunity, get myself at a more comfortable level. But one thing I never want to do is play against the trend. So I'll lighten up my positions, but unless I have a real catalyst, I'm not just going to start shorting, an uptrending market. And I highly recommend do not short a strong uptrend, do not go long, in a really big downtrend unless you have some reversal sign. But for this, once we got that, notification that, New York schools are closing down, that was sort of that little trigger where I thought, I already am getting more sort of neutral or bearish. Let me throw on some hedges here. So I chose IWM because I think that one is the most COVID sensitive. And, as I talked about earlier, this one had gotten pretty stretched. I'm going to pull this one up. So I think this is pretty funny. So IWM, let's bring it up on FinViz. So IWM, if you check this out, I'm going to see if I can make this full screen. Oh, okay. Oh, wait, let's throw on the Bollinger Bands as well. So this is so classic. Definitely, this is something to watch out for. Okay, we got our Bollinger Bands on. But if you take a look here, whenever this thing is hitting the lower Bollinger Band, that is typically when everybody's going oh man, I want to short the small caps. Time to go short. Time to close out my positions. Then when we're hitting that upper Bollinger Band, that's typically when everyone is FOMOing. So for instance, down here when I was getting very long, nobody wanted to be long. But of course up here when we are super extended, pretty much going off the chart at this point, that's where everyone is super bulled up. So for me, I was you know what, I want to put a hedge on. This one is very extended. Look at these moving averages. The 20-day is at 165. And we have the 50-day moving average at around 158. So I figured if I'm going to hedge, let me just pick up a hedge now while we're super extended. And then for Marriott, this one is super funny. I was chatting with another handle you should be following here for the Fin. Super underfollowed handle. I was actually chatting with him about this trade. This one, again, is going to be a big beneficiary once COVID is, behind us and once we can reopen. But as of now, given that poor headline, given how stretched everyone is, I figured let me take a short position here. Let's take a look. So we have the Marriott trade. I just picked up some December puts for $5.20. So at this point, I feel a lot more comfortable with my portfolio, where I've taken out, a bunch of longs while we were in that nice green tape. Now I have a couple of hedges in place. So at this point, I'm pretty much ready to see what the river brings. Then lastly, let's check out some options order flow. Let's see. Yeah, let's see what we got today. Okay, so 59% call flow, 41% put flow. When I posted that tweet about everyone turning bullish, like the bears are extinct, this was at about like 71% call flow, 29% put flow. So sure enough, I'm sure there were a lot of people that had to capitulate. But let's filter this out. Oh wow, so we did get a bunch of people that ended up putting in orders for puts towards the close. That is so funny. This happens every single time, guys. Nobody wants to hedge when the market is super green. They only want to hedge, once we're in a super red tape. Like, watch this. Like, if we have another red day tomorrow, there's probably going to be way more hedges coming on. But yeah, you can see a lot of people betting against IWM, going with the December puts, very similar to what I did. You can see some people, let's see what they bought. A bunch of people shorting Beyond Meat. That's pretty interesting. Let's see what Beyond Meat is doing. I believe this one. Okay. Yeah, so sure enough, this one had completely taken a dive from around $200 a share all the way down to like 113 on the lows. Looks like it's having a bit of a counter trend bounce. It looks like people are coming in to short that bounce. So this kind of makes sense. Let's see what else we have. Buying calls in emerging markets. We've seen a lot of that. We have one Boeing call buyer. The Boeing call buyers have been rewarded significantly. Let's see how Boeing did today. Wow, so big reversal candle from Boeing. This one, again, had a very nice run all the way up to 220. But yeah, sure enough, if you came into this one super late when it was overbought, now you're getting punished. So that is interesting. And then this one, FIAC. Let's take a look at that one. This is a company that I have been interested in. It's a SPAC. And wow, this one, yeah, they buy the calls when it's super overbought. This is so funny. Yeah, like I say, like a lot of times these guys are actually wrong, but it is just good to see the psychology of the markets and see where the smart money or the big money is placing their bets.